Some reaction now. I'm joined by Redge Nkosi, Executive Director at Firstsource Money. Redge, appreciate you speaking to us on News at Prime. So let's talk about the African Growth and Opportunity Act, Agoa, and how it has impacted African countries.
Well, firstly, this is an important initiative that Bill Clinton in 2000 enacted into law. It has helped considerably quite a number of countries in Africa, but most importantly, South Africa itself. South Africa, almost 25% of its goods are exported via Agoa instrument, so that's quite helpful. Lesotho, as already the President mentioned, has taken advantage. But in fact, countries north of us have taken advantage of Agoa, so it has been very, very important a trade instrument for most of the African countries, even if some of the African countries have actually bought it out of it. But I think Agoa remains a very, very important trade tool for the continent in terms of industrialization, job creation, and of course, foreign exchange reserves as well. So this is indeed a vital instrument for most of the countries.
Now, Redge, explain to us the tariffs or lack of tariffs or the absence of tariffs around those that choose to use Agoa to export to the United States. Just how significant a number is it?
Well, it's quite large, but it depends really in type of products. Some industrial products, we have had significant tariffs in the U.S., which have been going down anyway, but we do still have tariffs that are quite high up, and therefore Agoa gives South Africa and indeed the rest of the continent or sub-Saharan Africa a great chance of having to export to the U.S. But I think as time passes, these tariffs will begin to go down as they have been going down for quite a while now, and the band is narrowing to the extent that perhaps in the year 20 or 50, we shall be seeing the narrowing of those tariffs, and therefore Agoa may become a lot less helpful. In fact, South Africa, if I were to just give you a sense, if we were to export out of Agoa, which 75% of the products do, we could lose in the regions of about 60 billion. I think with time, we may come down to about 40 or even 30 billion. So it is going to be losing value with time, but as of now, it is an important instrument for industrialization in the continent and here at home.
So let's talk about the African Free Continental Trade Area and Agoa. Do they converge at any point? I mean, you're talking about 2050 and how many of those tariffs would come down, but I'd like to imagine that over the next few years, as the African Free Trade Area opens up for business, that there will be potentially a lot more trade happening on the continent and not necessarily taking it beyond.
Well, it may seem so, yeah. Of course, there will be intra-Africa trade. That's the whole idea of having these Africa Continental Free Trade Areas, to boost intra-continental trade. And, the truth is the U.S. will remain a vital market, even if we're going to have intra-continental trade. I mean, look, we can have intra-continental trade just as Europe is having, but they still trade with the U.S., Asia, and so on. So it really matters not, in my view, whether Africa continues to use the Continental Free Trade Area. There will be global trade anyway. Remember, the industrializations differ. America can consume a great deal of our products that could not actually be consumed intercontinentally. So I think that instrument remains important and will remain important for the next 10 to 15 years.
Redge, let's shift our attention to U.S. Secretary of State Antony Blinken. And now he's mentioned wanting to improve Agoa, not just renew it. What specific changes, in your mind, or improvements are being considered, and what impact might these have on African exports to the United States?
I think the range of products that are in Agoa should be widened. My sense is that the foreign minister of the U.S., Blinken, may be thinking in those lines. If we widen the range of products, that obviously helps Africa as a whole. But also there's one other area, the rules of origin. There's some procedures that are involved in there are quite rigorous if you have to export to the U.S. You may have to tinker with them a bit. And the rules of origin, products having to be sourced from, say, Ethiopia, that the very chains that may exist between South Africa and other African countries, those should actually be loosened in the sense that if they are broadened, then of course the benefits will accrue directly to many of the African countries that are within the African Continental Free Trade Area. So I think, therefore, the foreign minister is looking in terms of the rules of origin and other procedures, as well as broadening the basket of goods that are being exported to the U.S.
Now, there have been several calls in the United States amid calls to review South Africa's access to Agoa amid its stance on Russia's invasion of Ukraine and its level of development. And we've also seen the implications, or certainly the axing, if you will, of a number of countries from Agoa. So as a geopolitical tool, do you get the sense that America has the power to use it to its advantage, or to punish countries based on certain stances that they take politically?
There's no doubt. I mean, we've seen this. The Lady R issue here in South Africa got a great deal of attention in the U.S., and some congressmen actually suggested that we should pull South Africa out of AGOA. Remember, while AGOA is an economic matter, there are geopolitical issues around that. In fact, there are political issues. The U.S. itself doesn't want to lose Africa from its economic and political influence. And so while AGOA is an economic matter, the U.S. is also concerned, should the U.S. continue to use AGOA as a political tool, it may as well lose quite a number of countries in Africa, which will be therefore facing the other side. And the U.S. doesn't want to do that. So there are lots of issues that are coming up. But I think, in my view, AGOA should remain an economic instrument. South African national interest must at all times feature, just as much as the U.S. national interest must feature. There are going to be differences right across the world. By the way, there are differences between the U.S. and Russia. Russia and the U.S. are trading quite vigorously. I should see no reason why we should, in fact, be told that, no, don't be friend to the BRICS, don't go to Russia and so on, when in fact they're trading with Russia, while they're also geopolitical enemies as well.
Redge Nkosi makes some fair points around Agoa, and he is the Executive Director at Firstsource Money. Thanks for your time. Appreciate you speaking to us on News at Prime.